All right, class, how's it going? What we're gonna do is we're gonna go over our working problems 15-2. So we're using the accounting and cengage. So let me pull up the PowerPoint over the material. So we're gonna be working on adjusting merchandise inventory and interest receivable. So we're working on adjusting and closing out the year. So right now, what first problem we're working on is going to be the and uh, merchandise inventory, make the adjustment, and based off of what we found. And so, if you look at those first four questions, the balance of the account being adjusted is the 108,000. What should the balance be for this account? 102,000. So how much does it need to be adjusted by? That's going to be the decrease, the difference between the 108, the 102. Granted, there's 486 and 838 added to each of those values. So it's not going to be a $6,000 difference. It's going to be actually a $5,648 difference. And so all we're doing is subtracting those two, and we're going to find that difference. And so we're going to credit our merchandise inventory because we've sold it. It's added income, and so we're going to have to debit our income summary account. So we're moving that merchandise value out into our income summary. So that's what we're going to do for the first part. And then the second part is where we're going to be working on our adjusting interest received. And so the example they give us is that we had a note receivable for 90 days at 9% interest in the textbook. And so what we need to do is we need to figure out how much are we actually getting of that receivable added to this time period. Granted, if you look at this case, it says it was signed November 1st. So if it's 90 days, it's going to go to like the end of January roughly when you figure out the days. And so you're not going to get the full interest received in this calendar period. So you only get roughly 60 days as it's stated here. And so we have to do the 60 days out of the 360 because we're not going to get the other 30 because those are going to fall into the new year. And so that's the amount that's going to be adjusted as it's stating. So the interest income that we're only going to receive is going to be for the 60 days, and we're going to adjust that into our interest receivable. And so let's go ahead and get on to the working problems. Just a quick review of it. And the next one. Okay, same thing. Physical account merchandise, December 31st balances to be 158,000. Journalized adjusted entry for merchandise. So it's 165. 5 minus the 158 or 20. So that's going to be $7,028.21. $7,028.21. And then we got put the 31st here. We're going to increase our income summary and decrease with the credit of merchandise inventory. And then now we're going to do the next one. The single note receivable outstanding on December 31st. The 120-day 9% note was signed on October 18th. Journalized the adjusted entry. So we need to go get the note. And the note is 7,500. And so we know that it's October 18th for 120 days. So we know it's going to go into the new year, some of the day count. So we know there's 31 days in October minus the 18th. That's 13 plus 30 plus 31. is 74. 7,500 is the note receivable times 0.09 for 9% times 74 divided by 360. That's how many days we're gonna get interest accumulated through this time period. And so that should be $138.75. Okay. So we're debiting interest receivable. I can stop. And interest income is being credited. That's it. Pretty simple. Any questions? Send a message. Comment below. You guys have a great day.